Good morning, traders. It is 8:22 a.m., March 29th, 2021, and this is my pre-market outlook. As we get into the day, or I should say today's title, After the Squeeze is Squozed. A little joke with grammar there. But after the squeeze, what happens? Can we maintain these levels now that we've pushed through and made it up here? Well, let's take a look. For a brief second, let's go back and look at Friday, and what I said in the title is that I spy a short squeeze, and it seems as though many people are confused as to what a short squeeze is. They do happen often, maybe not as big as GameStop, but it is a regular phenomenon. It is basically where, let's take this level here. Oh, wrong tool. Let's take this level here as what I would call a line in the sand. And everybody sees resistance stacking at this level. And the odds are that this is resistance, and there'll be, well, the odds are better for a bearish trade right here. And what happens is that with a lot of traders stacking up bearish trades right here, it begins to ease up into the area, and people think that the trade is going their direction, and many people pile on to this bearish trade. But either because of time or the imbalance of the float available, this trade goes against the majority of the traders. And what ends up happening is that somewhere about here, people start to realize that this trade is not going their way. And there are a lot of stop losses that are set at this level. And you have buyers buying at this level. And that, in conjunction with people realizing that this trade is not going their way and they have to jump out. And in order to cover your short or close a short, you have to buy. And that type of buying teamed up with normal buying at a level like this, it creates a springboard where you get this sharp price up, or sharp jump in price, because people are stacked up at this level looking for it to go down, and it's not going down, so they have to buy to close their positions. And that, teamed up with the regular buying for people going this direction, creates this sharp jump. It happens all the time in trading. It's just, I guess, been popularized by the GameStop trade. But I just wanted to revisit that for just a moment. So now, on to today. Can we stay up at these levels? in order to answer that, we have to start to pay attention to the real undercurrents of the market right now. We all know the havoc that the bonds and TNX have played on big tech. Rates go higher, big tech, the QQQs, they go lower. So, with majority of people already understanding and seeing this play out, the real culprit right now to me is going to be the financials. And the reason why we're saying the financials, because next to big tech, this is where some of your biggest market caps are located. And I mentioned a while ago about how big tech and the financials were playing tug of war. And we're kind of back to that same stance. I'll be looking for what will happen with financials this week. I put on a short in financials a while, let's say a week or two back. And it's just kind of treading water right now. And I think this may be the week that I try to add to that short. It seems as though that higher rates would be good for financials, but the higher rates aren't really the problem. What's going to be the problem is this meteoric rise in rates that the market is going to have trouble digesting. With things happening at such a fast pace, it's a lot to kind of grab a hold of. So that's what I'm going to be paying attention to. And another short I put on a couple weeks ago that has done well, and I'll probably be looking to add to that position as well, is HYG. And that's basically your high yield junk bonds. And these are going to be longer term plays that I'm looking to hold on to for a long ride down. So it's going to be a lot of rolling in those positions. But that is going to be the key thing to pay attention to this week. And one of the things that I take away from Friday, I talk about correlation in the advanced decline line a lot. I pay attention to it a lot, several different ways. And the reason for that, it's an easy way to track rotations. Being able to track rotations and seeing where money is going to and coming from. And I talk about that all the time, and this is one of the ways that I will be watching the sectors and watching the tug of war play out between financials and tech. Right here you have the advanced decline of the S&P 100. that's one thing that I'll be watching. And the next item that I'll be watching is basically the sectors to see where money is coming from and going to. Watching it this way and watching it play out. Because like I said, financials, that's going to be kind of like the linchpin in this market, I feel, from now on out. Because we already see how tech is taking this. Tech has already kind of spilled its cookies and then it's trying to gather it back up, but we know that tech is down. So we have to kind of watch financials to see if they can either hold this market up by themselves, or whether it joins the tech on the ground and, you know, we start to fall and the rest of the market pretty much falls in line with both of those. So that's what we'll be looking at. And the thing that I noticed on Friday is that we had correlation. We had a 90 plus advancers versus 10 declining at one point late Friday. So the interesting thing to see is that if at some point we start to see some sell side activity, will we get that same correlation to the downside? And if we get that correlation to the downside, there could be some strong sell side activity where we travel a long way down in a short period of time. And it continues over days. So that's going to be the thing to keep an eye on. So with that being said, let's get into today's possible outcomes. Okay, outcome number one, in which I give about a 45% probability of happening today, is we have a lot of support here. We have support here, this 393 area, and support here, this 391 area. And what we're looking at is that somehow if we break through all of this support, is that we hold support at this 390 area. And if we can hold support at this 390 area, we get a bounce kind of back, not really a bounce, but we get consolidation in between this 395 and 391 area. We kind of get consolidation to happen here, which make this, which gives it opportunity to kind of build energy for another breakout. But right now, we get just this kind of consolidation here, trying to figure out what happens. So that's outcome number one. All right, now going into outcome number two, in which I give a 35% probability of happening today, is that we break support of that 390, 389 area. Again, I mentioned about support here along this 390 area. And if somehow we break through that, any pop back up here into this area, it is going to be a great duration short. And when I say duration, what I'll be looking to do is put a number of short positions on at this level and either pick them off over time, one at a time when we get to certain targets, or I'll just roll them out further into the future and taking profits at roll points. So that's another thing that I'll be looking for here with this outcome number 2. We break below, pop back up, and then we go lower. First target is probably going to be the 385 area. So that is outcome number 2. Now let's get into outcome number 3, in which I have a 20% probability of happening. And believe it or not, there is a bigger chance of this happening. I just don't believe it to be today. But I don't think we've seen the last of these levels. Especially when we have a we're going to have a first of the month and we have a short trading week. So a lot could take place in a short period of time. Because even if somehow we break down here into these levels, with the first coming up, it sets up an opportunity later on in the week for a trend day up, where we could quickly come back up to retest these levels. But going into outcome number 3 is that, again, we have here this 391 area. And as you can see, there's a lot of support here. There's a support at 393 and support at 391. And we don't even make it back to test the 390 area, but we hold the 391 area. And if we can hold the 391 area, we could go back and retest the 400 area. So that's what I'm looking for in outcome number 3. And it's much more possible for me to see that later on in the week. But it is still a probability that is in play right now. Okay, so we have gone over all 3 outcomes. Key things to pay attention to, a quick recap. Definitely pay attention to financials. With big tech in the midst of a bounce, if financials get weak and we see some type of sell-off in financials, it could be bad for the overall market, because we know big tech does not have a lot of leg left to stand on. So pay attention to the XLF. As always, know your risk. There's a lot of risk to the downside at these levels. So be careful, and wishing you a profitable day. Have a good one.